I deeply apologize that we are starting this a bit late. There's been an interesting phenomenon in my area the last 2 weeks. Having lived in quote and unquote a developing country, it feels like I'm back there. We've had quite a few power outages. They usually last about 2 minutes maximum, but when they happen, they shut everything down. And I think there must be an internet or broadband exchange just around the corner that is being affected. And so I've been scrambling for the last hour with first no electricity and then no internet. And of course, we're in a lockdown. So my office is about, well, 45 minutes from here. Coffee shops aren't open, libraries aren't open, public places for the internet aren't open. And so we are in 2020. It is the new normal, but we hopefully have figured it out for today. So welcome, everybody. Now, because of the situation, I've had to switch what to do today. And so I spent the last hour just rushing, trying to figure out some kind of way to get some kind of internet. So I've worked out some, it's still not perfect, but I've worked out some hodgepodge situation, which we're going to have to work with. So what I'm going to do today is to get the best out of today, I am going to do a beginner's forum, although as usual, I advise every single experienced trader to watch this and listen to it, because especially for the vast majority of you, if you got trained or if you learned to trade on the internet or using traditional retail methods, I can guarantee you your foundations are messed up. And if they're messed up, then they need correcting. And so many of the experienced traders have been affirming the fact that the work we do here in the beginners forums is quite foundational for them in getting to trade correctly. So having said that, let's get started. My computer is still figuring out how to use this hodgepodge internet connection I put together. So be patient with it. I will share my chart with you in a second, and we will go from there. So let us see. Share screen. And the beautiful thing about YouTube is, for those who come in late, when they come in, they can just start at the beginning of the video. And they will see everything that we said at the start. Right, so let's get rid of that. There we go. By the way, quick check. Currently in a couple of trades. 1 second, let me see. Right, so currently in a couple of trades. Let's see what they look like. I gave them out this morning, or at least one of them was from yesterday, and I gave the other one out this morning. Let's just log in and see how those are doing. So here they are. They're not doing too bad. There is a short on the Swissy. So a long on the Swissy. This one is middling around. I want to see some action. But there it is. That's the long on the Swissy. We've been in that trade since yesterday morning. We had a little bit of a scare down here, but we stayed in it and we were fine, and we're looking to get to that. Now I've adjusted the profit target on that because what it's done doesn't give me too much confidence, especially about the fact that it's a Friday. So when I trade on a Friday, I've got my trades on a very short leash. So that's kind of where I'm aiming for. That will be almost, I'll be round about a 4-1. uh, running into there. And then on the GU, just let me know who is in when you guys come in, so I know who I'm dealing with. Good to see you, Esther. On the pound dollar, there we go. It's a very nice trade, very impromptu, and I'm hoping that will pay handsomely. So those are the trades we're in at the moment. Right now, brand new chart. Let us do this. So newbies, I want to teach you something today using charts, and even the more experienced traders, you will find this of great value. Guys, as usual, when you come in, just sign in, let me know who's on the line so I know who I'm talking to and I can tailor my approach. Because if you are in the session, you should get it tailored to you. So even though everybody else can watch it live on demand, if you made the time to come in, then I want to reward that time by making it the most valuable to you. So, especially the new guys, I am so confused when I look at this chart. Now, you are going to start to get the first, you're going to get the first installment. Some of you are still going through your registration, your payments are still clearing. On Monday, you are going to get the first batch of your actual pre-recorded and pre-prepared course. That's going to take you through this from first principles. These sessions are to build on that material to give you a boost, a jump start, so that you are off to the races. Now, there is a particular video that I want you to go look at. Let me show it to you here. So if you come to our channel here, if you come to the channel, when you get to it, I want you to go to the section that says playlists. If you're a new trader, make sure you do this. Come to the section that says playlist and look for, 1 second now. Where is this playlist? Where is this playlist? All right. Right. Okay. I'm going to find it and send you. I'm not sure why this is not showing. I'm going to find it and send you the link. I'm going to put the link in the comment description here. I'm also going to put it on our Telegram group. It is this one here. Let me see if I can find it. Yep, Israel Keys Forex Foundation. So I'm not sure why that's not on the homepage. Anyway, that's the playlist. This is from last year. This talks about how to set up your account. I've already shown you that, but it goes into it in a bit more detail. And then you have the foundations of Forex part 1 and part 2. Absolutely crucial. I cannot stress how crucial this is. So I'm going to copy that and I'm going to drop that in the comments. I am also going to drop it in the description. Let me see. So where is the description of this video? Right. I'm going to drop it in the description because it is absolutely crucial that you watch those videos to get an understanding of some of the stuff that we're doing here. We're trying to get the most value for your money in the 12 months. And therefore, there is no point repeating too much stuff that has already been given. So I'm putting that there. Please watch the foundations of Forex playlist. That's the playlist there. Cool. So it's now in the description section. And you should see it. So Once we're done with today, go watch that. There are several things there that you need to understand at the beginning of your journey. Now, today we're going to deal with one of them, and that's the concept of resistance and support. You're going to hear us say resistance, support, resistance, support, resistance, support. Now, from yesterday, we looked at a couple of things yesterday that I just want to go over real quick. Yesterday in the evening, if I can find the actual, cancel that. Let's see, which did we do it on? Okay, not that one. Maybe it was this one. If I can find the screenshot from yesterday. Okay, I can't find the screenshot from yesterday, at least not yet. That is fine. We'll get it and show it to you. But we looked at a couple of things. One of them, I got a few questions from a new trader on, so let me touch on that real quick, is the fact that when we say long, we mean up. When we say down, we mean, or short, we mean down. So let's put that in there. I was hoping I could show you the screenshot. In Forex, up is also called long or bullish. Down is also called long or bullish. I'm talking about price moving upwards. Good to see you, Sonny. Good to see you, Gerard. If you hear me say down or short or bearish, I am talking about price moving down. So this way is up. It is also a long. So if we say we're taking a long on the EU, it means we're taking a trade in the buy direction. If we say we're taking a short on the EU, let's take this one here. It means we're taking a sell or in the down direction. And in fact, let me add to that. Long or bullish or buy. Down is short or bearish or sell. Are we clear on that, guys? Let me know. We clear? So no more confusion about that. If you knew that, forgive me. Like I said, it seems that the majority of people on today are beginners, but you will learn something whether or not you're a beginner, I guarantee you. So we also looked at the fact that price doesn't just go up or down indefinitely, right? For instance, when it's coming down, let's start with down here. Using our Fibonacci's like we taught you to do, we have expansions and retracements. So let me show you that. This from here to here is an expansion. In essence, it's called an expansion because it is a short-term or intermediate move in the direction of the long-term move. So here, this is price's long-term move. So long-term, can somebody tell me what direction this pair has moved in? Type it in the comment section. What direction has this pair moved in this period of time here? So in this zone here, what direction has the pair moved in? Somebody type it in the comment section. The answer is bearish. Correct. It's bearish or a sell or a short. So it's bearish overall. So you can say it's moved bearishly, or it has been sold because down is sell, or this is what we call a short. That's the overall trend. So let's write down the word trend there. I'm going to define the trend for you in a second. Now, a trend is a long-term, consistent directional movement in price. Oh, Gerard, somebody says well done, so I guess I'll tell you well done too. A trend means price moves consistently. Yeah, Sonny, it's also, call it a sell or short. Or so a trend means price is moving consistently in one direction. It means over a period of time, over several legs. I'm going to define the word legs. Over several legs, it is consistently moving in one direction. But it doesn't just jump from here to here, does it? As you can see, it comes down, then comes up a little bit. Then comes down again. So this is from here to here. And it comes down again. Then comes up again. Here. Then it comes down again. Then it comes up again. I'm going to show one more up and one more down before I stop, so you get the point. Now, these are called legs of price. So, one leg is an expansion plus a retracement. The move in the direction of the long-term trend is the expansion. So since the long-term trend here is downwards, the expansion or the expansions are the down moves, and the retracements are the up moves. And you will see that this is how price moves. It doesn't just run down in one direction. It will zigzag. So expansion, retracement, expansion, retracement, expansion, retracement, expansion, retracement, expansion, retracement, expansion, retracement, expansion again, until it flips direction. This is why the first thing we taught you guys, which most trainers will say, why are you teaching them that? That's too advanced. Nope. We have faith in you. You're not idiots. You're very smart people. The first thing we taught you was something called a market structure break, remember? Because a market structure break is what changes the long-term direction of prices movement. Now, this was the last retracement here at the end of this trend. That was the last retracement there. And then there was another expansion here. And we could have thought that price was going to keep going further down, right? Type in the comment section if you see that there is valid reason, because as at this point, we don't know what's going to happen next, right? When we see this, we don't know what's going to happen next. So we could have thought that this movement here would go all the way down there, right? That would not have been unreasonable. But, and so if that were to happen, we'd expect maybe a retracement. So we could have thought that this was the retracement here, and then price would carry on going down. However, when a retracement takes out the last retracement, when you have a retracement that is further than the last one, meaning it takes out that high there, this is what we call the market structure break. Let me show it to you on a clean set of charts here. You come this way. Expansion, retracement, expansion, retracement, expansion, retracement, expansion, retracement, expansion again. When this retracement takes out the last retracement. When you have a retracement that's higher than a previous retracement, so that would be one there. You could have a less obvious one here as well. So Javad, have I answered your question? This is the market structure break I'm talking about. When you have a retracement that takes out the previous retracement, that is the market structure break. Let me show it to you. You have price come down here. You would normally expect it, say, to come here. Let me move this one. And then keep going down, further down, right? But instead, it decides to go up. In essence, it forms a V that takes out that. That is a market structure break. Let me put that in here. Insert. This is a market structure break. And it is called a market structure break for a simple reason. Market structure break, you will hear myself or Talkbear type it out or refer to it as an MSB. What's this? What are these trades doing? Okay. As an MSB. 1 second. Just want to see what GU is doing real quick. All right. It's retracing. It's interesting. Anyway. We move. Where were we? Cool. So that's a market structure break. Now, this is why it's called a market structure break. You see these legs of price we're talking about here? These are what we refer to as market structure. Market structure is the concept that when price is trending, if it's trending down, meaning you're selling or shorting or it's bearish in a bearish market, it's the concept that you are going to keep having lower lows and lower highs. So as long as you have lower lows and lower highs, that is a bearish market structure, right? So let's put this in here. Consistent lower lows and lower highs equals bearish market structure. Now, the opposite is true. On the upside, if you keep having higher highs and higher lows, like you see here, higher highs, higher lows. One second, so I just want to check this one real quick. It's a Friday. Anyway, let's keep it going. Sorry, just watching my trades. Higher highs, higher lows. That is a bullish market structure. So consistent higher highs and higher lows equals bullish market structure. And being able to spot market structure is very important because we are going to be teaching you. Remember the very first class we did on Fibonacci's? The whole concept of why Fibonacci's work is that you are assuming what direction. So for instance, if you're the other way around, you're assuming what direction you're going in terms of your market structure. So if we're going up, then I want to buy at a discount. So I'm not going to buy here because there's no discount there. See? That price is expensive. However, once it completes this leg here, so this is one leg, the expansion and the retracement is one leg, I then move to the next leg. That was the expansion. Where does the retracement come in? Here, the retracement comes in at 38.2. Now, that is a discount. So I'm going to buy. Why am I buying here? Because I assume I am in a bullish market structure. And then I move it again to the next leg. So the old retracement becomes the beginning of the next expansion. So that's the next leg there. The retracement comes in very deep. That's a very cheap price to buy at. So I buy. Then that's an expansion. That's a retracement. This is not complete until it breaks the old market structure high there. So this I'm not taking account of this in my decision, because until it pushes back above that original expansion, this is still one sub expansion. The moment it breaks out and then it comes up there, then I move that again. This is now the retrace. This is now the next leg. And then we keep going until we have a market structure break. Now see this here. This was the last retracement. That's so we in essence, we would think at this point that this is another expansion, right? We would be expecting a discount retracement to buy again, because at this point we have been in a bullish market structure. or a bullish trend. So other traders call it a trend. Here in Israel Keys, we are going to refer to it primarily as market structure. They mean the same thing, but we use the word market structure to explain the concept of what you are expecting. However, the moment this previous retracement is broken there, this here, at this point here, is the market structure break. And the truth of the matter is, it doesn't need to be by much. 3 pips for me proves, well, depends on the time frame. But even on a 15-minute time frame, 3 pips for me is plenty of confirmation. I don't need more. It doesn't need to break it by 5, 10, 15 pips. And I know a couple people just joined us yesterday. A pip is the measurement of price in Forex. You will get that with your first week's study pack. So we count in pips. So the 4th decimal here is a pip. And that's how we count movements in price. So this is the market structure break. So this would be what we call a bearish market structure break, because it has broken market structure to the south. Now we have a test, because sometimes this will happen and the next expansion will just take it further up. If this happens, meaning the next expansion just takes it further up, then we call that a stop hunt. Let me give you an example of a stop hunt. Right. So this is one here. See? There we go. And it breaks market structure there. Look at that. It breaks the market structure there. In essence, let me know you guys are still following. You might assume that that is going further down, but look at what it does. It then carries on. Actually, no, this is wrong, actually. This is wrong, sorry. This is a wrong example. This is a different thing I'm trying to explain here. Let me find, because I don't want to confuse you. Let me find a very clear one. Let me find a very, very clear one. Aha. There we go. You see that here? So that's the retracement. There's another expansion here. Here. And then it takes out that level there. See that? That looks like a market structure break. But then price doesn't keep going down as you would expect for a normal market structure break. It carries going up and it makes another higher high. This here is what we call a stop hunt. So if you hear us talk about a stop hunt, this is a stop hunt. This is an example of a stop hunt on SH. I call it, this is my personal term, Tucker doesn't like it, but I call it an unconfirmed market structure break. Because, one quick second, I'm just checking this trade. What is this thing doing? Anyway, Because the fact that a market structure break happens doesn't mean that the market structure has completely shifted. In this case, from bullish to bearish. This could just be a manipulation. It could simply be what we call a manipulation. Or engineered liquidity. In essence, they came back into that zone to pick up orders that they knew would be resting there, a liquidity run, and then they carry on in their original direction. So that there is an unconfirmed market structure break. Gerard, no, because if the MSB, if the chart changes direction long term, then it wasn't just a stop hunt per se. It was a reversal. But I'll explain that in a second. So this is an example. I'll come back to that question in a second. This is an example of an unconfirmed market structure break. In essence, price break structure, but then carries on going in the original direction. This happens all the time. These are the trades that I take. Does that make sense? These are my kinds of trades. Let me give you an example. Majority of the signals I take are like this. This break down here is coming into this order block here. It's coming into that order block there. Can you see that? So an order block means there's liquidity. The intermediate low means there is liquidity. And so this is a liquidity run. That's what we call a stop hunt. It's a manipulation on engineered liquidity. Yes, Gerald, I use stop hunts to find my signals. Definitely. Without a shadow of a doubt. And then it goes the right way. Or it goes the original way. However, the other kind of market structure break is when it breaks structure, it does not post a higher high. Now this could be here beneath the break level. It could be, say, it could be lower than the break level here. It could be higher than the break level. It could come all the way to here. But as long as it does not break that original high that formed or that pushed the market structure break, if this goes anywhere between here and here, in this case it comes here and then it carries on going the other way. This here, let me show you another example on a cleaner chart. So you see this here? That was the last expansion up. And then this is down here. We would expect this to carry on going up, but it doesn't. It fails here. And then it breaks beneath that level there. You see that? That's a market structure break, right? Now, the question is, if it's just going to carry on going up and continue, then all it was a stop hunt. But because it failed to breach that level, it could have been anywhere in this zone. Could have been there, there, even there. As long as it's lower than that, it could be all the way up here. As long as it's lower than that high, it fails to make a higher high. And then makes another lower low. This is what we call, so first thing we call it, one second, or first thing it is, forget what you call it, is a reversal. Second thing it is, or what I call it, is a confirmed, one second, confirmed market structure break. Yep. So let me take this. I'm going to start taking screenshots myself because I can't seem to find them later when I want them. These are the things that you need to be watching for in your charts. So you need to understand market structure, know when there's a market structure break, but then ask yourself, is it simply a stop hunt, meaning it's an unconfirmed market structure break? It's just a manipulation, so price can carry on moving in the original direction? Or is it a confirmed market structure break, which is a reversal? Any questions so far before I carry on? Yep. A reversal is where the chart actually changes direction long term. The issue is when it starts, you will not know it's a reversal until you have seen this. There has to be a market structure break with either a lower high or a higher low, and then another market structure break, or another market structure, quote unquote, break, to tell you that that has fully changed direction. I guess you wouldn't call the second one a market structure break. You would just call it the breaking of that level. So this is what, so now, okay, let me put this here. This is an example here of a bearish reversal. It's a bearish reversal because it's a reversal that starts a bearish trend or a bearish market structure. This here is an example. So that's there. This is where it breaks structure here. Then it posts a higher low and it starts going. This would be an example of a bullish reversal. Bullish because it changes things into a bullish trend, or it starts bullish market structure. So this is a bullish reversal. So you just got to capitalize that. This is a bullish reversal. Again, let me take a screenshot of that. And again, I wonder, what is GU doing? Okay. It's an interesting one. So it looks like it is going to try and make, if you look at this here, this is going to try and make, or it looks like it's going to try. It may not get there for a stop hunt, but I just thought when it pushed down that, so that's 25 pips. Okay, we'll see how it goes. All right, we'll see how it goes. So back to our chart. So that's a bullish reversal. This here is a bearish reversal. This is a confirmed, so it comes below there. It fails to carry on the original direction and it pushes lower again. That's a confirmed market structure break. Which means it's a reversal. This one here is simply a stop hunt. It was an unconfirmed market structure break because it did not change direction. It kept going the other way. And so it's a manipulation or engineered liquidity. Right, now back to where we started. So now the question becomes, where can you, because see, if you could go through your chart in the future, if you knew, if I could put a magic line there and tell you that there would be a market structure break in that area, you'd make money all the time, wouldn't you? If you could just stare at a chart and figure out all the places where market structure was going to change, break, all the reversals, right? You'd be a millionaire very soon. Because you would just go and wait at that red line. You'd wait for market structure break. You'd wait for it to be confirmed. So it's confirmed at this point here, right? And then you would just go about along your merry way and you'd make your money. Now, what if I told you there is a way to predict exactly where market structure breaks that cause reversals will happen? Truth is, there is. And the trick is, see, this is a 1 hour chart. If I drop down to jump up to a 4 hour chart, can you see that this quote unquote reversals are just part of a long-term move? In essence, and it's worse if you look at a daily chart. Look at that on a daily chart. That's a bit clumsy. Let me see if I can push that in. Okay, no, that's too clumsy. I need to show you a different chart. Anyway, the point is, by using some of okay, let me get that off there. So by using some of the principles we have already taught you and we will still teach you, you can, to a degree, accurately predict where these things are going to happen. For instance, can you see this level here where this market structure break happened? Look at this here. Look at that there. Right? Could you have predicted that area in the past? Yes. Where? From here. Or there. Or there. Or there. One second. Point is, that line is very busy. If we drop up to 4 hour chart, that line there is extremely busy over the years. Every time price gets to that level, it seems to do something. Can you see? Look, that's the same line in the past. This is from October, from November last year to October last year. Look at that line. Look at that line. You see this all the time. This is the consequence of believing that a market maker is a position trader. Their levels are going to be significant over long periods of time. So it is very reasonable with some training. For instance, you see this line here that we formed here, right? Let's go into the future. Something happens there. Something happens there. One quick second, guys. Hold on a quick second for me. Sorry about that. But we will see that in that same line in the future, I can bet you good money. At some point in this next few weeks or month or two, we are coming back down to that line. Book it. Take a screenshot of this, right? Take a screenshot of this and keep it. Price will come there, and when it does, it will do something significant, because that is just the way the markets work. There are historical levels that drive reversals or retracement trades or consolidations. In essence, reversal means it gets there, goes the other way. Consolidation means it gets there and it hangs around there for a while. And then retracement means that this could be a retracement, for instance. It could break through. Give an example of how that works. It could break through it, but then it will come back to it to give you the opportunity to take a retracement trade like this. So it'll come there as the expansion. It'll give you a deep retracement so you can sell at a premium. And then you will take the trade at that level and then carry on going. So watch that. Let me take a screenshot of that. That will happen at some point this year. It could be days, weeks, or months, but it will happen. I am going to bet you the fact that it definitely will. There's no chance it's not going to happen. Absolutely no chance it's not going to happen. Right. So this then leads us to an exciting concept. What's this doing? What are these trades doing today? Anyway, this leads us to an exciting concept that I've been waiting to show you for a while. And it's very simple, but it's very exciting. It's the concept of support and resistance. And I'm going to end with this today over the next 10 minutes or so. Actually, I'll do this for 10 minutes and then I'll give you a chance to ask questions. No, not you. Support and resistance. So remember, up is bullish or long or buy. Down is bearish, short or sell. Support or a support level. So we refer to these as, let me put this here now. Levels means a particular price, and zones, which means a range. So for instance, this is a level here. The exact point at which that place changed, or we don't even have to be that precise. We could put it anywhere in that region. We could say this, for instance. This is a level. On the other hand, this here is a zone. It means it's not an exact level. It's just a zone anywhere in that level or in that region. So support and resistance works both as levels and zones. But this is how it works. Whenever price is bullish and it reaches a level or a zone that significantly reverses it, that is a resistance. Give me a second, guys. Yep, sorry about that. So this here is a resistance level, resistance level, or zone. It is called resistance because, let's put that there. Let me make that smaller. It is called resistance because it resisted the upward motion of price. In essence, price is trying to get higher. Think of it as a ceiling. Price is trying to jump, and it keeps telling it you can't go any further. No further, no further, no further. On the other end of the chart here, again, you could have a level or a zone where price is going bearishly and then it is forced to reverse significantly in the other direction. This here is what we call support. In essence, something is holding price up. It is refusing to allow it go any lower than that. Right? Type if you see what I mean, if you get it. So resistance is something that stops price from moving upwards. Support is something that stops price from moving downwards. It is at levels of resistance and support that we look for things like market structure breaks or even just stop hunts. These are the levels that you should be looking for on your chart. You don't just go everywhere willy-nilly saying, let me see what's going on here. Okay, now that is really turning around. All right, cool. Actually, let me look at this in a 1 hour chart. That's interesting. It's very interesting. Anyways, anywho, just pick a booing at my trade. So These are the levels where you are watching for stuff to happen, and you need to come into your day or week or month already with an idea where you expect this to happen. Now let me give you two examples. For instance, you see this level here. Let me refine this level a little bit. I am going to move this here to there. Why? Because if you can see there is a previous level of support. Can you see that? Price came down and then something sent it back up. So that is a previous level of support. In the future, that previous level of support becomes a level of resistance. Yep, Gerard. Resistance is just simply where the price changes direction. Whether it's a stop hunt or not is something where price is stopped either temporarily or long term from moving forwards. Upward, that's resistance, and then the opposite support. This will all be in your notes when you get the PDFs. Now, you're right. What it does with the rest of the chart is whether or not it becomes a stop hunt or a full reversal. But you can see here, yes, Sonny, you're right. There is great question, because previous order blocks are specifically great levels of resistance and support. But before we come there, you can see that a previous level of support here has become a level of resistance here. In this case, it's very straightforward. Look at this here. In this case, a previous level of support is now a new level of support. It doesn't really matter which direction it is. All you need to know is this. 1 second. Previous levels of support and resistance tend to repeat in the future as support and resistance. The direction is irrelevant. It could be a previous support that becomes a future support. It could be a previous resistance that becomes a future resistance. It could be a previous support that becomes a future resistance. It could be a previous resistance that becomes a future support. The order is irrelevant. Just know that previous levels of support and resistance tend to become future levels of support and resistance. And this happens all the time. Now, to Sonny's question, all an order block is a previous level of support or resistance. For instance, there's an order block here. So yes, that now becomes where price turns around this time. But the order block here was a previous place where price had support or resistance. In this case, support. It becomes future support. In this case, the order block is a zone. And so you will hear many retail traders talk about supply zones and demand zones. Supply simply means, you know what, I'm going to talk about that next class. So next class, remind me to talk about supply and demand. But it also, I address supply and demand in the Forex Foundation video or playlist that I asked you guys to go listen to. So I don't want to confuse you today. But just remember this. When people talk about supply and demand zones, what they're really talking about are order blocks. Zones in the past where price changed direction, when it comes back into those zones or those levels, there is a high chance that it will change direction again. Like you see, it doesn't matter the order. It could have been support one way and resistance the next, or support and support, or resistance and resistance. And in some cases, you can see resistance that becomes support in the future. For instance, let me give you an example of that. This is an area of resistance. Look at that. So something turned price around there, so it was a resistance. In the future, it's now a support. It happens all the time. All I want you to do today, now my assignment for you today is go through your charts and see if you can spot, when you see resistance or support, a major level, draw a line on it and go back in time and ask yourself, was there a previous level of support or zone of support or resistance in the past that informed that level of zone in the present? So let's recap. We've looked at a lot today. Well done. You guys have been troopers. So we looked at resistance to support and resistance, levels and zones, the fact that previous levels of support and resistance become future levels of support or resistance either way. But before we got there, we laid a foundation by talking about the difference between up and down. Up is long or bullish or buy, down is short or bearish or sell, and that price doesn't just move in one direction all the time over long periods of time. It forms expansions and retracements in fulfilling the overall trend. And that when we talk about a trend, like retail traders do, we're really referring in market maker parlance to a market structure. So bullish market structure is consistent higher highs and higher lows. Bearish market structure is consistent lower lows and lower highs. Expansion, retracement, expansion, retracement. Expansion, retracement, expansion, retracement, and on. And that when the market structure breaks, in essence, when a bullish market structure suffers a lower low, it could either be a confirmed break, in which case it signals a reversal, or it could be an unconfirmed break, in which case it's just a stop hunt and price goes back in the same direction. So that would be a manipulation. The same thing too, when there is a bearish market structure break, does price confirm by making a lower high, or is it just a stop hunt in which it carries on going the other way? Let me end by saying this today. The two types of trades you should be stalking. So there's two ways this trader trades. And as you've seen, I think I'm all right. I think I've proven over the last year with some of you that I'm all right. There's two ways I trade, primarily. There's different subsections, but there's two primary kinds of trades I take. Number one is I take stop hunts. Stop hunts. 1 second. Let me put this here. So Israel's trading philosophy. It's not the only way to do it, but it works well for me, and I commend it to you. Number one, I trade stop hunts. Number two, actually there's three. Number two, I trade reversals. Number two, I trade reversals. And number three, I trade discount or premium retracements. So a stop hunt is very clear. Let's see if I can find one here. And actually, sometimes a stop hunt can be a reversal, but I'll cover that next time. I don't want to confuse you with that, but let me give you a quick example of where stop hunt can be a reversal. Look at this. That's the stop hunt there. It's tapping into liquidity, but it's also reversal. As you can see, it's also reversal. But these are the kinds of reversals I like to take. This one here. So stop hunt reversals and discount premium. Now, discount premium means once it's changed direction, as it's going up and down, I literally just put my Fibonacci like I showed you guys last time. I put my Fibonacci and I wait for, if I'm buying, I wait for a discount. If I'm selling, I wait for it to be at a premium, and then I take the trade on the retracement. But so these are the three ways, and I'm going to go into this next time. But the principle is, I need to know what levels to expect the stop hunts, the reversals, or the premium and retracements. The discount, premium, retracements, those levels I find by Fibonacci and also by using order blocks. The stop hunts and the reversals are where support and resistance come in. I'm looking for previous levels of resistance and previous levels of support, historical levels, to expect stop hunts or reversals. And that's why I took the time to teach you this today. Extremely important. Any questions quickly before we close? Aha! Now we're talking. Behave yourself. Don't scare me there. Okay, sorry, just staring at my trade. It's a Friday, so I've told you guys, Fridays I have a very, very, very quick trigger. If I see stuff I don't like on a Friday, I'm closing that trade, because Friday is a very, very good day for market makers to pull all kinds of manipulations. So, any questions? Any questions? I know some of you are slightly behind, so let me type this in, because I know some people are watching this 15 minutes behind the rest of us. Any questions before we close? So they can see. Because sometimes some of you, by the time you see the question, the fact that I'm asking for questions, we've already closed. So, all right, no questions from Gerard, none from Esther, none from Joshua. Cool. Let me give a couple of people a second more. Okay, cool. So, data today. So, I'm going to sign off here for today. Let me just show you this again real quick. Right. So this is officially the last webinar this week. Sunday is a new week. So when I say this week, I'm looking at the fact that Sunday is officially a new week. So this is the last webinar this week. Joshua is available the whole of today. I'm not moving after this webinar. I'm not going to be available for private tutoring, but Joshua is. I don't know if Talkbear is as well. With me and Talkbear, you just take us as you find us. Joshua has clearly defined times where he's available for you to reach out to him. And so if you have any questions, any issues, just speak to him. You can send me questions in the Telegram group. I may be slow in responding because I've got to get ready for a very busy afternoon and evening. But go back and watch this video over and over and over again. Also, let me remind you, if you are a new trader, 1 second. Right. So this is the video that we're currently on. So you can see this is the video here, right? It's unlisted, so only people with the link can find it. If you go to the description section here, let me see if I can zoom this in. How do you zoom in this browser? Forget it. Anyway, in the description section here is a playlist. If we click on that playlist, it'll bring you to this video. 1 here is for setting up. So that's for the really new guys. If you haven't set up your broker account yet or your charts, this video will teach you how to do it. Also, there's another video a session we did about 4 days ago that will also teach you how to do it, or ask Joshua. So 1 second, let me find. This is Joshua, handsome young man. So get in touch with Joshua to see if he can help you with that. Right, sorry. I know you guys lost me for a second. So this is, so that's Joshua. But these 2 videos here, Foundations of Forex Part 1, Beyond the Basics, and Foundations of Forex Part 2, True Technical Analysis, you definitely want to watch both videos before you come back next week. Make this compulsory watching between now and when we come back on Sunday night. Sonny's question: if we get order blocks for support or resistance, get market such to be confirmed, then the next can be to use strip. Yep, exactly. Simple. It really is that simple. Perfect. I'm going to leave that on the screen. But you need to be sure you're using the right order blocks. That's the question. It needs to be the correct order block. As long as it's the correct one, and you learn how to spot the correct ones over time with us here, that's fine. All right, folks, it's been live. See you. Take care. And I will see you on Sunday evening. Hopefully you can hang out with Talkbear. So with Joshua today to get any issues you need resolved.